Steve, I'm here now. Okay, folks, welcome. We're going to get started in a minute. Okay, everybody, good morning and welcome to the Canada Rate Statement, the 10-minute trades trade room. My name is Lee Goldstein. I'm the trading director. And I just want to remind everybody that all trades are for educational purposes, and it is possible to lose money trading futures, so please trade carefully. Just a reminder, everything we're doing here is for educational purposes. Describe acting up. Steve, describe acting up. All right, so we're looking at the Canada Rate Statement. And it's, it's a money trade. Last month it didn't fill, so we'll keep an eye on it. Last month it just didn't respond, but previous 3-4 reports have had good solid moves, and it doesn't seem like a report with a large amount of risk, so I'm interested in trading it. Obviously, if it doesn't fill again, we'll keep an eye on it, but it's not uncommon for reports every now and then to not fill. When you say the bar data, Steve, if you can take a picture or a video. The other thing is, anytime you have a problem, create a brand new chart. Create a brand new chart and put the strategy on a brand new chart and see if that doesn't help. All right, let's look at the DMM. We have a mini DMM for this report. This is a report that we used to trade it a long time ago. And there's a lot of reports that we used to trade a long time ago, and now, sometimes we don't trade. And then they come back into favor. So this is one of those reports that used to have a lot of movement. Then it went quiet during the world crisis, and now the bank reports are moving. A lot of them are tradable. What you're finding, no one's expecting interest rate changes at the moment. What seems to be driving movement in bank reports is quantitative easing types of data, what the banks are buying in terms of the way that they're keeping their countries safe, trying to keep their countries safe from inflation. I don't know if they're succeeding, but they're trying. So we'll see how this trades today. Let's look at last month. So I'm just scrolling to last month. I'm just checking the setup to see what we used. I used the target 5, 11, and 20. I always like to see what entry time I was using. I used 10 o'clock on this. It's probably safe to use 59. So we were trading live last month, and it just didn't do anything. You'll see. Here's the video. Okay, so here's 10 seconds before the report. I was watching gold on the right. Now, there was a pretty large pre-move, which sometimes happens in bank reports. You might get pre-trade volatility. It happens in a lot of reports where you'll get pre-trade volatility. So 20 seconds, no move. Now, I might wait longer, and I'll show you why. Before I cancel. I'm not going to cancel quickly on a bank report. Look at July also. Here's July, the 2 bank reports ago. Let me get the DMM, the little DMM first. So it's a 20-second cancel. I might go a little bit longer. Bracket of 8, activate 59, 20-second cancel, targets 5, 10, and 20. You can do something like that, and a stop of 15. That's the suggested settings. So let's look at, this was July's video. Now what's interesting is I have March. March, the markets were so different. I just don't think you can really count them in your testing anymore. March is just too far back. It did have a decent move, but the markets are nothing like March. The markets are, it's very hard to go back more than 4 months in these markets. Even 4 months ago, the markets were radically different than the way they are now. Here's July. Oops. Yes, Albert, it's 59. The entry is incorrect. We're never going to put an entry on that far in advance, so it's a misprint. So July had a very nice move. Now it looked like a head fake almost. It almost looked like it wanted to go the other direction. Now the report's 10 o'clock, so the entry is going to be 9:59, 59, or 10 o'clock. This report, my testing is 10 o'clock. Now in July, it was a jolt down that didn't really do anything. I put my orders on at 10. And the move is well after 10. That's a good solid move. So July had a good move. Looking at June. Steve, I'll look at the video after this room, and then I'll get back to you, okay? So this is June. It's a lousy video. When I say a lousy video, it's a video I didn't record myself. I can always tell when the video was recorded by the trade room software. They don't fast forward and rewind as well for some reason. I don't know why. Hang on one second. Let me get my recorder going, which I can't get it going yet. Hold on. Hang on one second. I just want to start my recorder so we record all this. There we go. Okay, let's look at that July video one more time. I'm just scrolling to get to the time of the trade. That's all I'm doing. Okay, this was July 14th, 2021. Whoops. There we go. And it looks like it was a good move. So that was a very nice move in July. September was no fill. All right. That was a good solid move. Let's look at June. That's what we were looking at. One more time. This was the video I had trouble. Getting to the beginning of the trade. Good. Right there. June. Fills and doesn't follow through initially. So June looks pretty dull. It filled and then just didn't move or do anything. So I shrunk my targets down to nothing. Just trying to get out flat. And you could just see prices just sitting. The hardest trade to manage is a dull trade like that when it doesn't move. So I'm trying to get out but not give back too many ticks if I can avoid it. It was very hard to get out of that trade. And then it reversed on us and got us. So June was a loss. And then April, it was a good trade. Okay, here's April's trade. Again, you had pre-trade volatility. April looked a lot like July, didn't it? Big move to the upside. Big move to the upside in April. So here's how I would set up my trade. Let's look one more time at the little VMM. Okay, so a bracket of 8. Got a bracket of 8. You've got, I'm going to trade 3 positions. And I'm going to go for 5. 9, and 19. I'm going to go 5, 9, and 17. There's no quarterly report this period. The reports move better when there's quarterly reports also. So I'm just shrinking my targets a little bit. The stop is 15. And the entry time for me is 10 o'clock. That's my testing. This report does not fill, generally doesn't fill early. I'll tell you what, I'm going to do 59. It should be 59, 59. If it was 29, that would be 31 minutes early, right? So you know that's a goof because we don't put trades on 31 minutes early, right? 9:29 for a 10 o'clock trade. It's not 10:59, 9:59. It's a 10 o'clock report, 9:59, 59. Using a bracket of 8, 3 positions, 5, 9, and 17. You could use 5, 10, and 16. You don't have to use the exact same targets. And then I'm trading for real. And I always label my trades. Canada rate. $9.59, definitely, $9.59. And you can use 10 o'clock. I've tested both. I know that over the years, I've always said it's better to put trades on later, but here's the truth. If you can put a trade on, the earliest you can safely put a trade on is better. The reason that we've gone to later times is because the reports have worked better with later entry times. Markets, because of the world crisis, have had so much volatility that when you put your trades on early, there was a lot of possibility of getting filled before reports came out, before news was released. But it's always better to try and put your trades on earlier because you want to have your orders on the chart well in advance of a move beginning. Because think of it like jumping on a train. It's much easier to get on a train that's stopped than to jump on a moving train. When you jump on a moving train, there's a chance of falling off, right? And it's the same is true of a trade. When you jump on a moving trade, it's harder to get a good fill. So ideally, that's why you want to study reports and try to make your entry time as early as safe. And that's going to very much depend on the general volatility of the markets that you're trading. Let's check our time sync. So what does it mean to check your time sync? We're always trading on a schedule, right? So we go to a website called time.is and it puts our computer in sync. It's important for us to be in sync because we're trading on a schedule. Sometimes we're trading in a second before a report comes out. If your computer's 3 seconds out of sync, you want to put it in sync. It's usually not that off, but it can be off enough to screw up a trade. It's possible. So in order to sync your computer, we go to a website called time.is. Not time.is.com, time.is. And you go to that website and it tries to put your computer in sync. Now, some computers, they just don't go in sync easily, and you need other tools. And in the room drive in this trade room, when I say the room drive, if you scroll up or look above your charts, there's a bar, like a taskbar for the trade room, and there's a folder that says room drive. In that folder, there's some files. You have the the file that creates our trading clock. And you have a program called D4 Time, which is Dimension 4. And Dimension 4 is a second tool that helps put your computer in sync. And you can download that. So once again, the reason we want to be in sync is because we're trading on time-based news. All right. Now, it's certainly not expected that they're going to change the interest rate. If they did change the interest rate, that would create a pretty big move in the currency futures. You never know which way it'll move, but it would be unexpected news. Unexpected news definitely has the opportunity to create more of an impact than expected news. And that's kind of when you think about that durable goods report. It was expected news on part of the report. When you go back and look at all the elements, you had the inventories, wholesale inventories. That was one report. You had advanced goods trade balance was sort of another report. Retail inventories, ex autos, and then core durable goods were matching. And some of the core durable goods were mixed. And it was pretty mixed news. Some of it seemed positive, some of it seemed negative, because there's three elements that made up that core durable goods report. But what's interesting is it had a pretty stable, interesting, tradable move. Now, folks, if you're watching on YouTube, you can come into the trade room just for this week. By going to this website, freetraderoom.com. And then I want to remind everybody also that I've given a webinar Saturday. And if you'd register for it, it would really help me out. And the webinar is the registration link, www.fmt2021.com, Saturday webinar. That webinar starts early. I believe it starts at 11:15 a.m. and I'll be there at 3. I'm on like almost at the end, which I would rather start. I'd rather be there at 11:15 and go first rather than have to wait the whole day Saturday. So I think there's about 8 different companies. And we need some new blood. It's always the same people. I'm sorry to say. I'd like to see some new blood. It would be nice to have a whole new way of marketing trading also. I think eventually there's not going to be any emails and it'll all just be internet driven. Steve, unfortunately, I can't do that in order for us to do something like that, we have to set it up. My bosses have to make that decision. I don't make that decision. You should email me and tell me what you do because it might be possible in the future, seriously. All right. So we're just waiting. We got about 5 minutes to go before this report. I'm a little bit dull this week, or today anyway, a little bit tired. We've got, I'm a little bit worried about tomorrow morning's natural gas trade room. I think I'm going to be late. I have an appointment in the morning. Hold on. What's an Oxford comma, Ray? What's an Oxford comma? Who knows what an Oxford comma is? So my daughter's in a mess, and I don't understand what she's asking me. Something about she's a writer and writing a job for somebody, and they are making edits, and they said she can't use the Oxford comma. I don't even know what that means. Who knows what the Oxford comma means? Anybody? It's the last comma. It's a rule about where you put commas. Why would someone say you can't use the Oxford comma? I don't know what you mean by a serial comma. A serial comma. The final comma in a list of things. Please bring your pencil, eraser, and notebook. So in other words, are you saying that you just leave out the last comma? Is that all it means? You just don't put in that pencil, comma, eraser, no comma? Let's watch the market. I am watching the market while I'm reading. Is that all it means? That's all it means, is you leave out the last comma that you expected to put in? I told her to Google it. Let's watch the market. We got a minute. Let's watch the market. We got a little bit more than a minute. I'd like to see a big move today. I just don't feel it. I don't feel like we're getting a big move. So let's see what happens. Now, there's been some reports that have been slow to respond. So I'm going to let it do its work. I'm not going to rush out. I think it'll fill. My gut feeling is it's going to fill. I'm just not feeling a big move. We've had a big move before the trade. I just don't know. All right, we got 20 seconds. It's acting like it wants to fill fast. Obviously, it's acting like it wants to go up. Have we had too big of a move prior to the report? Maybe. Maybe. So it's theoretically a 20-second cancel. So that was a disaster whipsaw, a disastrous whipsaw, which is really a shame because it was a monstrously big move. Now that order is not live, so it doesn't matter. Very frustrating, very frustrating. I'm going to reboot my platform really quick. Very quick. Very, very frustrating. So what happened is it whipped down, then up. It stopped me out on the downside. That's what happened. It stopped me out on the downside. Very, very frustrating because it was a fantastic move. But look at the whipsaw down. Look at the whipsaw down. It filled first. It looked like it filled first. What happened? I'm just curious what happened to people in the room. What happened? Did anybody trade that with me? For me, I mean, it filled in the right direction, but it went down before it went back up. Because you can see it filled at 70 and closed on the way down. It's really a shame because it was a fantastic move, a fantastic move. It's really a shame. Paul, you're lucky you got no fill. And then some people made money. And that's what happens when the market goes crazy like that. That's a report that it just went totally off the rails. That's an off the rail move. Yes, it went up, whipped down, then up. I got filled long and not a bad fill either. But it went down and it kept going down. That's the problem. It whipsawed down. It whipsawed down. So it's a shame. Whipsaws really hurt. It really hurts. I'm just watching the market for a minute. So we have oil. Yeah, no, I understand. So half the people that traded, some made money and some didn't. Some did not. Some did not. And some got, I got a pretty big hit. I was trading 3 contracts. It's frustrating when you have a perfect move, but it whips first. There's not much you can do about that. Not much you can do. What time, people who won, what time did you enter the trade? What time did you enter the trade? So I'm curious, the time of the executions. What time? So it executed at 10 o'clock. They executed. So the entry time wouldn't have mattered. It wouldn't have saved you. It wasn't the execution time that was the problem. Because some people that won went at 59. And probably some did 10 o'clock also. All right, we're here to look at oil as well. I'm going to change my charts. So it's always a frustration if you have a great move, but the move is preceded by a whip. And I mean, this report has not whipsawed in the last 5 reports. It certainly hasn't shown a propensity for moving in that way. Doesn't change that it's frustrating. All right, so we're looking at oil now as a 1030 oil report. So there's a whole bunch of news that affects the price of oil. A lot of elements that affect the price of oil. Gasoline inventories, gasoline production, distillates, which start to take on more importance in the winter, like propane and energy fuels such as propane. But the main number, if there was only one number that you looked at for this oil report, it would be crude oil inventories. See you, Albert. So there's a lot of elements that make up the oil report. Currently, we are as a company not trading oil live at the moment. Oil has been trading better. Oil's been very inconsistent for the year. It goes through a month or two where it trades well, and then it's had times where it's very whippy and doesn't hit targets. Lately, it's been hitting a lot of first targets and not following through. But it's been allowing most people to get out with a first target profit. But when an index is constantly hitting a first target and it isn't following through regularly, it's hard to make good profits. Because it'll hit the first target. Some of the trades, it'll whip you out and not even give you a profit because the first target's pretty small. So oil can be tough to trade. Oil is choppy at times. And look at the bullishness of oil since the market opened this morning. Look at that. What happened on the oil open at 9 o'clock? So 9 o'clock oil opened right here and it went down, tried to change direction, and it went down until the market opened, and then oil just went on a tear. It went from a low to making a new high in half an hour. So it went from 93, it went up over $1. That's a huge move in oil. Sound is working. Sound's working, right, folks? You can all hear me? Let me know if you can hear me and I'll tell. Okay. Okay, so oil, we're on CL 1221. Now, there are people that like to trade oil no matter what. Let's look at some oil videos. And I'll show you what I mean about, I think last week was my memory is that last week was a pretty good oil trade. We'll watch. Let me grab the video. Give me 1 second. So last week would have been the 20th for oil. Let me line up a whole bunch of videos. Oh boy, oh boy, oh boy, oh boy, oh boy. Give me 1 second. I don't know where these reports disappear to sometimes. The 14th was the week before. I have a folder of reports and they sometimes just don't appear in chronological order. They just show up sometimes in the file wherever they feel like it. It's so strange. And sometimes it has to do with how I name the file. Okay, so here was, last week we did a lesson in the oil room also. So let me see if this shows the normal trade as well. So I think on the right side, I was doing the normal breakout. Now, oil had a good, I was showing a reversal. Oil had a pretty decent move up last week, had a pretty decent move up. And we were trying the reversal. I remember the reversal did not work last week. It did not work. Sometimes oil will just keep moving, keep moving, keep moving. The week before was the 14th. And oil is a report, a DMM, a daily report you have to read carefully. And I'll show you what I mean. So this was oil on the 14th. And that was a pretty good oil trading report on the 14th. What you want from oil is a move that's not so fast that it gives you a bad fill. You want fast enough to go through all the targets, but slow enough to give you a good fill. Now that looked like a pretty good move. It did have some slippage. You could see it got filled about halfway down the candle. And then it keeps going though. So that's a report that should have hit all targets. And let me look at my notes in the journal. I try to say what happened to people that are trading oil live. Some people like trading oil live. So what I'm hearing for last week is that it moved pretty fast. Let's see, that was the 14th. No, forgive me. Wrong report. Bear with me. Nope. 1 second. Let me look at it one more time. So that was the 14th. Now I'm showing for the 14th oil inventories hit the first target and reversed. That's what I'm showing on the 14th. So let's look at that one more time. It was an 11 o'clock trade because it was a holiday that week on Monday. So here was the 14th. And the reports are the move was too fast, that it barely filled the first target and then pulled back up before it went back down. So you can see it chopping upward and then it goes back down. Sometimes oil moves so choppy that you can't see with the naked eye all the moves that the index makes. And that is the real truth. You cannot always see the move. And that's true of any fast report. You can look at a 1 second chart to see the moves better, or a 1 range chart also to see the moves better. Now on the 6th of October, I'm showing in my notes that it hit both targets. So October 6th was 3 reports ago. Bracket at 10 on oil. It fills, hits target 1, and then shoots down and hits target 2. Pretty choppy, but it shoots down, hits 2 targets. So that was on the 6th. Then before the 6th, so the report before the 6th was 9/29. Let's look at that. And then 9/22 was before that one. And 9/15. So we'll look at 3 more. And I'll compare them to my journal notes. And then I'll show you how we set up the trade. So 9/29. Let's look at that one more time. Now 9/29 to me looks like a stop. 9/29 looks like a stop. Yep. Now I was using a larger target than normal because I was only testing 1 contract. So some people, if they used a target of 7, which is the first target on our report, they might have hit their first target. So it also is very dependent on the way you set up your trade. That can have a dramatic effect on what happens in any trade. Your targets. If you get greedy on targets, on reports that have a propensity to reverse, then you can lose when other people win. If you go for 11 ticks of profit when the report says 7, it's probably smart to go for the lesser first target. It's always safer to especially not be greedy on a first target. I think it makes more sense to have bigger second targets. So let's look at 9. That was 9/29, September 22nd. Here's the 22nd. Oil's been tough. I think oil is tough to trade. I was live that day. It missed my target by 1 tick. 1 tick. And then I tried to get out. I couldn't get out. And then it goes down. It's really choppy on the 22nd. And I got out with 2 ticks. 2 ticks, and then it went a little further. There was a drawdown, which normally would push prices up. In other words, there was less oil around, which usually will push prices up. Look at the difference in oil prices just over the past month. $71 in September, it's 84 now. That's a big increase in the price of oil. And let's look at September 15th. Look at oil, so bullish right now, very bullish. Extremely bullish. Since 9:30, oil has been on a tear. It's up over $1. That's $10 a tick, 100 ticks. $10 a tick, 100 ticks. Now, my notes on that last trade that we just looked at, 9:22, the journal says, pretty choppy. Well, we traded that live, so we know what happened. It was best to use the smaller first target because the target of 10 didn't get hit. We struggled to get out without losing money. So oil makes sense to go easy on your first target. And then our last report, the 15th, very whippy. Looks like it hits the first target. Let's see what the notes say. That looked tough. Oil has not been trading great. You could see it in all the reports. Not steadily moving in one direction by any means. Oil got really more difficult to trade about 2 months ago. It went through a period about 6 months ago where it went through quite a bunch of weeks where it was trading very, very well. And it's since then, it's really been a tough report. On the 15th of September, the report we just watched, people did not make money. That was not a good tradable report. So, I see people saying it's better to lose an opportunity, not money. I think the reality is you need to trade the reports that you feel you have an opportunity to make money on. You're not going to make money on every report. And sometimes, look, that Bank of Canada report, very frustrating. It should have been a winner, but it whipsawed. There's not much you can do. So you got to keep trading and just keep trading according to your plan. Trade the good reports. Like I have a plan this week. I know what I'm going to trade this week. I've got 2 earnings reports I'm trading. There's not a lot of family money trades this week. There just aren't. Not much I can do about that. There's a bond report tomorrow, and it's not one of my favorite bond reports, to be honest. The 7-year bond hasn't been great. But I'll trade Amazon and I'll trade Apple. And there's just not a lot of phenomenal trades. It's not a great group of trades this week. It's just not filled with my favorite trades. So you trade as smart as you can, try to protect your account. And sometimes you get dinged. It happens. It's going to happen. Let's set up the trade according to the daily report. So oil has a bracket of 10, targets of 7 and 15. It's a pretty straight ahead report to set up. Bracket is 10. Two positions, one for a target of 7, one for a target of 15. The stop is 12, and the entry time is 10:29:58. $10.29.58, and then I label it. Now, oil has not moved well in quite a while. It really hasn't. It's been choppy, and if you look at the report, target one fill, target one fill. I mean, last week it seemed to have a big move, but it was slow, 60 seconds and 50 ticks in 1 second. What happens when it moves that fast? You don't get a good fill. So sometimes you might have a giant move and you might not get a great fill. It may make it, even though there's a big move, doesn't always translate into a win. It depends, where did you get filled? All right. I just checked my sync. Let me do it again. Go to the website time.is to check your sync. Where did the time go? Okay, we're in sync. Don't forget to enable your trade if you're trading. And you all can hear me well? Okay, the sound is okay? Yes? I'm using the weirdest little headset. I can't believe you can hear me. All right, so we're waiting. We got about not even 2 minutes. They're expecting a build in oil, 1.9 million barrels. Expecting a drawdown in gasoline. Gasoline, not that important this time of year. Summer driving season's over. Looking at my squeeze, my momentum length on the 30-second squeeze is set to 17. Set to 17. See how the squeeze is the same color, same color, same color? Increasing momentum, then boom, it changes momentum color and direction, and it's smaller. That's a potential change in direction, potential reverse. So we're going to watch the oil. Well, we'll see how the oil trades, and then going to look at the 30-second chart to see how it reverses, if the signal's any good. All right, 5 seconds. Brackets are going to show up. Now, that looked like a tough trade to me. I think that was hard to make money on because it was so fast so fast. Now, there was a very large build, You want to be careful with reversals. Okay, even, you got your target. Okay, it worked. Even traded live, so it worked. It looked fast to me, and it looked like a fast reversal. In sim, it worked. It hit our targets. But it looked like it was so fast that maybe, depending on the fill, would have determined what actually happened. So even made 430 on 2 contracts. So very nice, even. 430 on 2 contracts. It's all about, so it's about the fill, Mark. If he got a completely different fill, I would have thought that that trade wouldn't have worked. If you look at the speed, with which it traded, I would have thought that would have been a loser. Hang on, let me just save the video so we can look at it. It bounced, well, it went very far past the VWAP though, Mark. I don't call that a VWAP bounce because it went too far past it. It went too far past it. So look at the video. Who else traded live using our exact settings? Who traded our exact settings? So Mark, the only thing I would say is that oil is the one of the highest risk reports you can trade. And it hasn't been trading well. So it can really hit your account if you trade it. I didn't trade it because I don't like the way it's been trading it. Tess, you used the exact settings and you got stopped. Even what settings did you use? Did you use the exact settings? So I think it went so far past it, Mark. I mean, you know, it's conjecture. We could argue it. That to me looked like a losing trade. I don't know how Eben made money on that trade. Okay, Mark, I'll agree with you. I'm not so sure I would say it respected the VWAP totally, because if you would have put your stop at the VWAP, you would have got stopped out. That's my problem with the VWAP. That if you would have put your stop there, it might not have saved you. But oil trading as breakouts right now is hard to trade. It's really trading hard. Very difficult. Now there was, so after 10:30, after the news candle, this is the news candle here, you got a reversal. Let's look at where that reversal printed. Was it a tradable reversal? So oil's at 69, 67. Very hard to get in on that reversal because it was such a fast burst to get the beginning of it. Yes, Mark, I'll tell you why it seems right. Because when you have a trade that's so fast like that, you don't have reliable, it's unreliable trading. It's like what happened to me on Canada. It was so fast, it doesn't respect stops, targets, anything when a trade moves that fast. There's so much random slippage when you have a move that's when it trades in an uncontrolled fashion. Now, Canada, I would trade every time. Oil, I'm currently not trading oil because doesn't seem safe to me. Doesn't seem safe to me. It's not in my trading plan. I don't like the odds, because when you look at all the reports, it's just not offering money. KT, sometimes you'll get a report that moves so fast it won't trigger. That happens. But the setup that we used, all that I used on the setup was a bracket of 10, a bracket of 10, bracket of 10. You've got one position for 7 ticks, one position for 15 ticks, and a stop loss of 12 ticks. That was it. The entry time was 10:29:58. 10:29:58. KT. So that was it. Now, it was pretty fast. Sometimes, make sure that you don't have stop limit orders checked. They should not be checked. Make sure your time was entry time, not unattended time, or not range start time. Okay. And the entry setup was on a reversal. It's just something I watch. I look at the squeeze on a 30-second chart, Eric, and when the color changes color after a major report, preferably after a good size move in the opposite direction, obviously. So you had a big move down, the color changed. So at 10:31, there was a potential long when the squeeze changed color and changed momentum also. It was a huge build today, huge build. So there was a 4 million build when they expected 1.9. Not huge, but a large build. I would call that a large build. Unexpected. A large unexpected. It pushed the price down initially, but then it couldn't stop the bullishness. And now it's moving down. But oil, like we said, oil was up over 100 ticks today. It was up 100 ticks. All right. So, folks, we'll be back. Let me see what time. I'm a little bit worried about being here on time for natural gas tomorrow. I have an appointment in the morning. I'm very worried I'm going to be late. So if I'm just giving a heads up, I hope I'm not late. I hope I make it back. Try to wait for me. Eric, that's the squeeze. That's the squeeze indicator. There's a squeeze available, I believe, on the Ninja Trader free forums called R Squeeze. But that's the TTMS Ninja Trader squeeze, and they're all very, very similar. Eric, you can send me an email, help@10minutetrades.com. And I can point you in a direction where you can find the squeeze. So oil, it goes up, and then you could say, see how you could say the darker squeeze gave you a possible reversal after it went up? Now, it's a little bit difficult from a psychological standpoint to take a short when oil is 100 points bullish. But also, there's a lot of people think to themselves, wow, it's 100 points bullish, I'm going to short that. TradeStation has a squeeze, Eric. John Carter and Hubert Centers have 1 million squeezes that they sell for TradeStation. It was always one of my favorite indicators for TradeStation. It's definitely available for TradeStation, but it wasn't free. It wasn't free on TradeStation. If you Google squeeze for TradeStation, now I haven't been on TradeStation in years, Eric, so I'm giving you very old information. But the indicator exists, and there's a lot of different versions of it, and John Carter still sells it. And he's part of a company called Simpler Trading. Simpler Options, Simpler Futures, I think, is one of his. He has 1 million sites. And it's about $300 maybe. Good indicator. They charged a lot for it, but it is available. It is available for TradeStation. He has other ones also. You know, Mark, I didn't think Carter was a used car salesman as bad as some of the others. They do a lot of selling. He does a lot of selling, definitely. But he does a lot of good trading too. He's a good trader. He is a good trader. So I just want to remind everybody, I'm giving a webinar Saturday. If you want to come and support me or just register to support me, www.fmt2021.com. I'll be on 3 p.m. on Saturday, and it'd be greatly appreciated. Thanks everybody on YouTube for watching us. And Chantal, you can shut down YouTube. Thanks, folks, and we'll see you next time. freetraderoom.com. You can visit us in the trade room for the rest of the week.